Welcome to the Norris Group Real Estate Podcast, a show committed to bringing you insights from thought leaders shaping the real estate industry. In each episode, we'll dive into conversations with industry experts and local insiders, all aimed at helping you thrive in an ever-changing real estate market, continuing the legacy that Bruce Norris created, sharing valuable knowledge, and empowering you on your real estate journey. Whether you're a seasoned pro or a newcomer, this is your go-to source for insider tips, market trends, and success strategies.
Hello, everybody. This is Joey Romero with the Norris Group, and alongside me across the country is Craig Evans, CEO of the Norris Group and Douglas Brooke Homes, and DBL Capital also. So I'll give you just a quick minute to say hello to everybody and introduce yourself and welcome everybody.
Yeah, guys, it's so good to have you on. I appreciate you jumping on with us today. We've got some great information to share and to go over about the event that's coming up and why I think it's important, why it'll be valuable use of your time. So again, I don't want to suck up a lot of Joey's time. He's got some really good stuff planned to talk through today. But I really appreciate you guys jumping on and giving us a little bit of your time today.
All right, so what we're going to do is I'm going to go through this presentation and then we'll open it up for questions at the very end. So here we go, everybody. All right, so we're here to talk about the boot camp and what we're doing with the boot camp and why we're doing it. Just as a kind of a side note, we just had the Beyond Uncharted event in Ontario, and a lot of the questions that I was getting and that you were getting. Well, more on my side, I was getting like, oh, can't wait to hear about this AI stuff. Can't wait to get to that AI stuff. But the other question was like, hey, what does Bruce think about Florida? Is he still in Florida? Hey, you guys still doing stuff in Florida? That's one of the biggest questions I was getting that day. And so in those conversations, they're like, you guys going to do the boot camp again? And I said, well, I mean, let us take a look at that, and so based on that, and with some of the numbers that we worked out, it's penciling what we figured out was pretty close to 2019, which is kind of crazy to think about, with the arc that we've gone through, through the pandemic and all of the cost increases and supply chain bogged down. So let's go through it a little bit. So what we're going to do is talk about migration, the market, and the actual boot camp today. All right, so we're not going to sugarcoat anything. Domestic migration has collapsed since 2022, but there is a silver lining at the end of this because while domestic migration has not done what it's done, part of that has been recovered because of net international migration. It leads the country, and so that makes up a lot of that, which ends up being the biggest reason why Florida still grows as a state in just residents. And that's really the big number you want to look at is, are people still coming in? Is the population actually growing? So that was kind of interesting to see that in 2025 it was still number one. So the reason why the domestic slowdown, there's a couple. Remote work, when that happened during COVID. Everybody wanted to be remote by the beach, somewhere nice. One of the things that kind of stopped us also, we had a couple hurricanes, and the insurance got out of hand. But the thing is, it's scaled way back from the 2 years that were following the hurricanes. Insurance costs. First of all, we can actually place insurance again fairly easily, especially on new builds. But how it affected migration was people were coming. That not everybody was buying a new home; they were buying older homes. So they were looking to buy these older homes, almost uninsurable in the post Ian and post Helene era. That's not the case anymore, and it was never the case for the new builds. Now the cost was a hindrance, but that's also gone back, and we'll show you guys when we do a cap rate analysis at the very end. Rising home prices, in 2022, there was a 40% price increase. It went from median home price of Florida went in the mid 200s to over $420,000 That was a big, it wasn't this huge gap between from where they were leaving to come to Florida, but that's also softened a little bit, but it's more normal now. Folks stopped coming because they were locked in, same as every other place. In California, sales are down. Big reason, everybody's got that 2 and 3 and 4% mortgage rates. But the market, it's more of a normal market now in Florida. So where do Florida Floridians go? And 82% of them don't leave the state. That was an interesting fact that I found out. Um, they're moving all over the state. Ocala is actually the three-time number one U.S. growth city, three-time rating champ, but they're staying home. Florida is ranked nationally number 2 in the U-Haul Growth Index, right behind only Texas. So people are still coming. So here's the outlook key takeaway. The migration boom is over. There's, some of those things that we've laid out. The administration, immigration policies have affected that too. International migration does fill the gap in Florida, though. So people are coming from the Caribbean, from South America, from Europe. They're still coming to Florida. So the pace is still positive, but just slower. So now instead of 900 to 1,200 people a day, only 700 people every day are showing up in Florida, you know, so still pretty good. So Florida is evolving, but it's not shrinking. The population is 23.5 million right now. It's expected to be, more than 25 million by 2030. So it's still going to go, still going to move forward. All right. So, what does that mean? Migration drives rental demand. As we all know, we are becoming more and more as a country, a renter country. It's a little bit concerning because the one thing that this country's built on is the American dream, right? Be able to afford. But now what I found in my research is that even the folks that are coming with money are deciding to rent. They're deciding to rent for longer periods of time, before they lay down those roots. So they want to try out an area. They want to try out a different type of home. And so that was interesting to me. So let's get into this a little bit. So Craig, if you want to take over, this was one of the main models that we're going to be driving at the Florida Bootcamp is our 15-15 model. So can you go through the capital outlay and the monthly cash flow for us, sir?
Yeah. So yeah, as Joey said, the 15-15 model from a rental perspective, that's a really good size model that we have seen has worked well in our rental program. So that's one that we build a lot personally within our fund. We build this one a lot within our fund. So this basically where we've got this is the way we're selling this to Norris Group investors is the sticks and bricks of that home is 219. Now, before we were breaking that out to show what the aggregate changes were within the areas as far as for additional adders that need to be done. Trying to clean that and really make it a lot easier to understand and user friendly. So we put permits, everything in those areas there. So in that process, 219 gets the sticks and bricks. The land, we're at 35K is what we've got on a budget of that for capital outlay. In that process, now that's where I will tell you some of that allows for some of the changes because there may be areas where you buy the land for less money, but there are a few other things that you've got to add into that. So again, we allow a total land and development budget to get horizontal before we start going vertical at 35K. Funds control, again, we're using funds control again from the law firm that we've used for years. Basically, all the money goes there. We don't touch that. The bills are paid directly to the trades. That way, everybody's money is protected. The only thing we've had to add, and this is where we realized that we were really hurting ourselves, was the amount of time and energy we put into vetting the land and making the acquisitions happen. We were spending so much time and energy and manpower to get out, walk the lots. We physically walk them, take videos, do a lot of things to make sure that we're we're working as hard as we can to get you the best lots possible on your plate to be able to see. So we had to start putting costs in there to be able to at least cover the time that we spend, because for every lot that we show you, we may actually vet 6 to 8 of them. So there's a lot of time, a lot of energy, a lot of fuel in that. So you can see the total capital outlay is roughly 259,800. Just literally went through the rents again yesterday with our property manager that does all the work for us. And he confirmed everything is still right now at a good average of $1,900 a month for the 1515 model, which is a 3-bedroom, 2-bath, 2-car garage. We've negotiated an even better rate than what we were getting from the property manager from before. So it was at 8%. It's now at 7%. So you can see there's a deduction of there. If you take your taxes and insurance, basically the taxes on that is running, what we allow is 2% on the sale price of that. So at 2%, and then you add your insurance in, that's running roughly $1,500 or so a year. So when you take the two of those together, it's about $516 a month. And the only thing we're incurring in that is lawn maintenance. So when you've got that in there, you got a monthly net of about 1126. Basically, if you take that, multiply that by 12, you've got your annual net operating income. Divide that by what we've got internally as far as a cash outlay to purchase that. That's giving you a cap rate of about 5.12. So you can see that it's not going to set the world on fire, but there's a lot. I mean, there's not much risk in that at all. So when you're you got a cap rate of 5.12, we all know from an investment side, that's a pretty stable investment that's going to keep chugging out day after day after day. Now, also what I don't do in that, and I intentionally don't do that, is I don't calculate any appreciation in that. And we do that intentionally because we want appreciation to be icing on the cake and just the excess. So we look at it as, what does it do today in what we're renting in the environment we're at. So if there's appreciation, we don't want to calculate that into it. We want that to be just excess. So this model, depending on where you're in, I mean, there's a few areas where the appraisal will go to 325. But the land is more there. So the yield really doesn't change. So in that process, we just wanted to keep it pretty simple and say, look, this product for all intents and purposes appraises about 305. That's a pretty accurate selling price that we're still getting right now in 35 to 40 days versus a build cost of, just shy of 260. So you're talking about you've got right at a $45,000 equity stake coming into that. For about 14% or almost 15%. Joe, if you remember when we were doing this, when we first started back in 19, Aaron always said, he said, man, if we can get them to where they're keeping a 10% equity stake, then that is a phenomenal position for them to buy into. So you can see we've actually increased that. We were talking about in 19, we were 10 to 11%. We're right at just shy of a 15% equity stake in that. So I think we've got a really viable product. And basically, Joe, I want to go back into it. We're talking about the product, but really what we're looking at is we've shifted our models and we're back to really focusing on affordability. The aspect that people need, they need to be able to either A, afford to buy a home or B, afford to rent a home. So we're focusing on everything that we do is about affordability. So
Well,
that's
one of the things, one of the things that we had talked about, especially in my meetings, when we first met, it was workforce housing. That was your bread and butter. Yep. I build homes for the workforce. Okay, this is back to it. The other thing about this, which this boot camp isn't a flip, it's not a flip strategy. So this is just a kind of some baked in safety, I guess. Right. But this is right in the wheelhouse of first time buyer.
Yep.
So that's another great benefit of this. So yeah, go ahead.
Yeah, no, that's exactly right. I mean, we're going back for the last 3 or 4 years. we had a lot of investors and a lot of people that they really wanted to look at bigger yields. And I understand it, right? It was a market that was on fire and everybody wanted the yield. But as we're seeing, there's a lot of people that are right now in the middle of some of those chasing those higher yields on some of the product that were, offering a better cap rate on it. Those are the hard ones to sell right now because they're not in an affordable price range. When you've got affordable product, that's what's moving. I was just going over that this morning with Kyle from our sales team that the when homes are priced right in an affordable market, an affordable pricing scale, and they're priced correctly, they're moving quickly because people need homes. Again, whether you're selling, whether you're renting, if they're priced correctly, they're moving quickly.
Yep. All right, so I'll take it back over here, Craig. So what we're seeing is, California migration is dropping. It's been dropping for years. I think one of the only reasons we gain is birth over death, right? Florida migration is still climbing, more residents. Rental demand is still strong. We just showed you, the cash flow numbers, they work. It's penciling. And there's other investors that have already been here and done that with us. So what stops people from doing this, right? It's the comfort. It's like out of state's a little scary. There's no relationship with the builder, the contractor, everything. So you gotta build that trust. That's where the Norris Group comes in. We've done that. We've done this since 2019. We're experienced. We've done it. And the biggest thing that we provide is that we quarterback the whole deal. So 7 years of top net migration, strong rental demand. And one of the things about what you might have and hold is, do you have a big rehab coming because you haven't fixed your rentals in a while? Well, there's none of that with brand new construction. So high price markets in California, New York, other places, there's negative cash flow, cap rate compression, the rehab risk on aging stock. How many of you own stuff that was built in the 70s? That is now 50 years old, because I was built in the 70s. So that's the reason I know. And the barrier to entry in California and in some places is so hard, and so Florida, the new construction that we're doing is, we have a steady rental demand. We're renting them in 30 to 60 days is what George is telling us now, so positive cash flow from day one, no rehab like we talked about, and a builder that we know. All right, so the product, we're gonna have, I think it's going to be 3 total models that we're going to talk about. 3 and 4 bedroom, single family homes. We're going to have similar pricing for those. We're not going to break down the whole boot camp today. Lot selection, and as Craig talked about, we're going to vet the land. There's a lot of things that we will talk about in Florida that they do that you need to be aware of. It's not like just seeing a lot with Google Maps and saying, "Oh yeah, I'll take that one." For one, you might not know that there might be some environmental issues that we have to teach you guys about and and make sure that we avoid. It's a project. It's a product that we're selling, not a project. You're not handling the project. We are. So how does this compare to the Burr method? So there's no rehab risk. There's no inherited tenant issues. Predictable cost basis like we just showed you guys, and a known timeline from now. We'll get into that during the boot camp. Because there's going to be a couple different timelines, so don't want to get into it. We don't have a lot of time here. Okay, so the advantage, deferred maintenance we talked about. We do have a warranty that's built into our new builds. Modern floor plans. These things have always been beautiful. All right, and so let's talk about what we've built in this boot camp. Okay, so we have a builder that we've done business with since 2020 now. The late stages of 2020. It wasn't the original builder, but we've, a lot of you guys have heard the story about our original builder. If you haven't, look it up. It's on a radio show somewhere with the boot camp, with the Norris Group podcast. We have a local vetted property manager that we've negotiated some great rates with, not only uh, to to lease up rate, but the monthly charge is lower than we have had in the past. This is somebody who's already renting all of the stuff that's coming out of the fund. Insurance partners. So we do have a couple of insurance companies that we've worked with ever since we've started. And they're the ones who, help us place the insurance, shop it all over the state and make sure we get the best rates. The fund controls, it's very important. So that's where one of the protections that has been built into the boot camp since the beginning. Um, the deposits go straight into funds control. And once we hit milestones, so there's an initial deposit, then there's milestones that they can't even access the rest of your money until those milestones are met on the builds. That's another part of the boot camp that we get into in detail when we're there. And then the Norris Group. Uh, I will be just like from before, even though Bruce and Aaron, were around driving, the excitement about this, it was always, and always Aaron would always tell me, you're the one handling this, you're the one dealing with it. So I've kind of been in this seat for what? It's 7 years now. So yeah, so for 7 years I've been the quarterback to contact. You need help talking to the builder, you go through me. You need help with the property manager, you go through me. You need help with a referral, you go through me. We are going to still be that part for the over 200 homes that we've built. We're still that, and we will continue to be that for you. All right, so let's talk about what the actual boot camp actually looked like. So the first day, we're going to be in a classroom setting. We'll still get the snacks, we'll still get, lunch, but we're going to go through our Florida Bootcamp book, and that's going to be filled with migration data, what people want, what people work, where people work, the areas that we're building in. It's going to talk about the things to look out for as far as environmental. We talk about hurricanes. We talk about how we protect against hurricanes. We talk about the building code. We talk about the different models, the pricing, everything. So we do a really deep dive into why we're there and how we're going to make you comfortable moving forward in Florida. So all that that happens on the first day. The second day is my favorite day. Well, I guess my one of my favorite things is when we all show up and we all go to dinner together. That's probably still super fun. But for me, I think still the second day is the most fun for me because that's when we actually all jump on a bus like an old school like elementary school field trip, and we go and we actually tour some of the build sites. So you get to see the area, you get to see the homes in different stages of finishing. So we'll visit one that's just at block, and maybe the trusses have been flown, and then we'll go to the next one. We'll have in the middle of the construction, so you start seeing some of the framing inside, some of the things that go on in the yard. And then at the very end, we'll visit one that's just about to sell. So you can see the finishes, you can see the paint, you can see in all of its glory. So when we come back after that, we will be available for everybody for one-on-one meetings. And so you can, ask questions, decide to move forward. Just tell us what your game plan is. You want to review your portfolio, whatever you want to do, we're available for you on the one-on-one meetings. So this is where we really get to know each other, and I just think it's a great fun day. It's a great fun event. We've had more than 175 investors come with us, and not everybody's built, and not everybody's built right away. We had investors that say, "Yep, I'm ready to go. I got capital to deploy. Let's do this. Let's start." Okay, but we've had investors that it took a couple times to come to the event and finally say, "You know what? All right, I'm ready now." Um, so so who are you? Is this for you? Are you the investor that is ready to go, ready to, that guy that I just talked about? Um, or are you the burned out W-2 investor? You want to be in real estate investing, but you still can't, get rid of that W-2, but you don't have time to be active and build your investment portfolio. So that's where we can step in. Our system can step in and help you do that. Um, and then the other folks are the people who have capital because they either just sold or they're planning 1031. And we really didn't even talk about like what the one of the bigger reasons too is um, why is Bruce in Florida? And I'm sure everybody on this call can tell us it's because of the legislation and how onerous it is to be a landlord in California. And so maybe Florida's not right for everybody. Maybe you want to go to Texas. Maybe you want to go to to Nevada, Idaho, Carolinas. Um, this one specifically is in Florida. It's an opportunity, and it won't be for everybody, but that's where we're at. And we do have a process um, for the folks who we have a 1031 partner. We have a process on how to not to trigger reverse 1031 exchanges, and so we'll go through that on the boot camp also. All right, so how does this work? So if you are excited about this, you want to come and just, have a good time with us and learn what it takes to not only invest out of state, but invest specifically in Florida. It is May 15th and the 16th. It is $995 per person. Now, if you bring a spouse or a partner, then it's only 500 for them. Okay. If you are on this call and you have come to our boot camp, we do have a discounted rate for people who are returning. But that's how we do this. And so this is truly a really fun educational event that we do. There's no pressure to build when we're there. It's all on your own timeline, and we're just there to help facilitate whatever it is that you need to do. So with that being said, let's go ahead and open it up for Q&A, and let's see if we got some questions in there. We do. All right. All right. First one. This is from Mark. One of my hesitations regarding Florida has been the issues with insurance in Florida. Has that been resolved?
You want to take that or you want me to answer it?
I'll let you start, and then we'll go from there.
Yeah, so really good question. After we had Ian was catastrophic, and everything that happened with that. We then had Helene the next year, and I forget whatever came like 2 weeks after that, and so it was a rough time. And actually, a lot of the insurance companies were actually pulling out of the state of Florida. So we ended up with Florida's state insurance, kind of picking up the pieces on that. That lasted for probably 7 or 8 months. And then all of a sudden we started getting companies coming back into the state of Florida and writing again. I think 2024, I think we had 14 new companies that year, and then a whole host of them next year or last year. So yeah, the insurance piece is calming down and really kind of solved itself. I mean, we don't have problems getting insurance. And as a matter of fact, even just in the last probably 90 days, we've seen our rates coming down on what we're starting to get bid on that. Not dramatically, but we're starting to see those coming down.
A big reason, guys, is because it's new. And new builds have to be built at a certain code. And that's one of the things that, bless you, one of the things that we talk about at the boot camp is the code I mean, so just a quick story. In 2020, when Hurricane Ian came, it was, gonna miss us, gonna head over towards Tampa, and then it said, "Oh, hey, there's Cape Coral. Isn't that where the Norris Group is building, over 100 homes?" Yes, it is. All right, I'm gonna make a right, and it went straight through. It went straight through our builds, 100%. We did not have a drop of water in any of our builds because of the way they're built to code. They have to be built to rate 150-mile-an-hour rating. Okay. Now, it isn't that we didn't have any loss. So we did have shingles. We did have PVC equipment on the outside that was broken, but we didn't have any any windows broken. And because of how we have to build them above the base flood elevation, the streets looked like canals. 3 days it had receded, and we were able to inspect every one of our builds and find out that we didn't have a drop of water inside of them. And so that goes to say that that is why our homes are insurable, and insurable at a greater clip and at a better rate. And so that's not an issue that we're having with insurance companies now. All
And
right.
Joey, I want to stress that, the amount of water that we had from the storm surge that came in through up through the channels, we had more storm surge than anybody has ever seen on record since they've started charting that, which was what, early 1900s, 1940, 1950. So there's never been a storm that's created that much storm surge and that much water as what we had with Ian. So we were excited to see the outcome of how our homes sustained. So
All right, next question. Please comment on the competition from future new construction. So you can talk about maybe some of the how the permitting has been way down
yep.
for new starts, and so I'll let you take that since you're in that field.
Yeah, so the permitting has definitely dropped. I was actually pulling it up a little bit. From December 25 to December 24, there's about a 43% decrease in permitting. Now, while we were up for January of 26, about a 9.5% increase. That was great, but yet we was still about 43% year over year down. So, what that's telling us is there's not a big pipeline of stuff sitting out there. Some of the big guys that build a ton of houses down here, so we may build a few hundred houses a year. You've got Lennar that, they were building 6,000 to 8,000 a year in the Tri-County area. They've pulled way back. A lot of them have pulled way back in the aspect of what was happening over the last 2 years because, the public companies can't sit on the inventory. So in that process, it is an interesting thing because there's not a lot of competition in the permits that are already in the pipeline.
How much is it for the 2 days? We talked about 995. We do have a discounted rate for the hotel where we're at. It's $150 a night, $159 a night. And obviously you got to fly to get there or from wherever you're coming from. But the actual cost of the boot camp is 995 and you could bring a partner or a spouse for another 500. What is your ARV loan percentage so we know how much to invest? Now, that's one of the things that we don't really get into because so I'll just mention it, Craig, and I'll let you expand. We don't, this was more of a play on, hey, you've appreciated, sell, you're sitting on some cash, you want to activate some cash. The financing just puts a whole different level into these. While we have done a couple of financing, if we've built over 200 homes, there's been less than 5 of them that have been built on financing. So while we can, what I can do is if you want to, maybe we could jump on a call with Craig and really get into that. We can do that. But we typically say this is the cost. This is how what it's going to take to build it. How you finance that is going to be up to you. We don't have referrals for that. We don't have a preferred lender. None of that stuff for this particular strategy. Do you want to add anything to that?
No, I think that's it. I mean, we used to do some of that, but now that we've started our equity fund with DBO Capital, this process for the Norris Group is really designed for those that want to pay cash, have the cash, or either want to do 1031 exchanges. If you're wanting to use financing and switch more from a cap rate to a cash on cash return and look at it from that perspective, much of what we do in our fund, I get it, and that's completely your choice. But we don't get into the funding side of that for you. We want to encourage you that's on your plate if you want to go that route. It definitely works. That's what we do with the fund. The system works that way, but you got to be able to handle and understand the nuances of the funding and new construction. It's a different animal. But that's why we do that in the fund. So a lot of people that don't want to do it, they actually invest in our fund and then they don't have to touch anything. It's just a passive process. So
All right, Matt's asking what area are the builds? So Southwest Florida, we're going to continue to build in Cape Coral, and then we're going to look at maybe one or two other locations. I know Lehigh is a consideration just because of where it's at strategically between, uh, some of the jobs that are coming in, and a lot of the development is actually coming in heavy in that area. So that's am I correct there? Is there
that's
another?
great. There's certain corridors, and we'll go over all in the boot camp and spend a lot of time as to why we're looking at those areas. But you're absolutely correct.
Okay, perfect. All right. As to the permit process, how long is that taking? So let me start by telling you the journey of 2019 to where we are now. So 2019, we can get a permit in 45 days. I mean, it was like lightning quick, you know. Uh, and so uh, because of the pandemic, the the permitting department got shuffled, closed, and that permit process went to, what would you say, Craig, like
9 months.
6 months?
Nine
6 to 9 months.
Yep.
And so that was a big reason why we stopped doing this boot camp, because of everything that was involved with the delays and things like that. But I'm happy to say that, Craig, what is the permitting process now today?
Yeah, it's about 63, 64 days beginning to end. But with our system, once we go hard on the money for us, we actually start our permitting process before we own the land. You could choose not to do that. It just means that your permitting time is going to be delayed a little bit. But realistically, if we within the first 5 to 10 days, we're going hard on the money on our lot, and we've already done our due diligence. We know we're buying the lot at that point. We've already got a title commitment at that point, things like that. So at that point, we start our permitting process within the first 5 to 7 days. If we're 63 to 65 days, let's call it, and we've got 30 days on closing, realistically, we're getting a permit within about, let's call it 45 days after after you own the land. We should be having a permit within, let's call it 45 days after that land purchase.
If this is a build to rent community, are we competing for the tenants and the concern of the rental community versus homeowner community with some rentals? So I'll start this and then I'll let you finish. So we actually, in our book, will tell you what percentage of people actually rent and what percentage of people own. But that part of the beauty of our strategy is that we are not building a community. We are not building tracks. This is a scattered lot model. So you can pick and choose based on where you visit or how familiar you get. You can pick a lot in the southeast. I'm in the northeast part of Cape Coral, and then another lot in Lehigh. It's completely up to you guys. So we're not competing with a whole new community that's being built in that standpoint. So I'll let you finish.
Yeah, you're right, Joe. And I think the thing to hit on that, and again, we'll go over this a lot in the boot camp, to where they start to understand and wrap their head around what this system looks like. But if you've never been to where we're building, Cape Coral, they've got over 70,000 vacant lots still. Lehigh Acre, there's still over 100,000 vacant lots. So when you're talking about the competition, it's an entirely different game. Your competition it's different than what a normal process is and what your normal thinking is. So you're really looking at to where are we building and who are we catering to versus a community, which is a typical build for rent model. So it's a different scenario than anywhere in the country that I've built.
How long are they taking to build and how long are they taking to rent? So I'll let you answer the second. Well, I'll let you answer, but so typically it's going to depend on how quickly we get the permit, right? And if we want to be super conservative right now, which we're going to be,
Yep.
it's going to be 7 months after permitting. Okay. Now, if we deliver before that, we're going to be heroes, right? But that's a realistic time frame, baking in some contingency into that, and that's typically not what we see, but that's what we will say.
Yep. Yeah. And Joe, you're right. I mean, what we don't want to do is step on our foot and go out there and say we're going to do it in this many days, and then we're 3 weeks past that and we look like liars, you know. So we're trying to be really conservative in what we say. The numbers still make sense to still pencil out, but the numbers that we are currently producing on our turn time are they are a little bit
They're less
less.
than that. That's all
They're
we'll
less
say.
than that, but we're just trying to be very conservative in what we talk about.
And typically, how long are they renting, taking the rent? What is George telling you?
It's really interesting. I mean, I don't think I've got anything right now that's over. I think the last one or the longest that I've got right now is one that's probably 42 days. And he called me this morning. He's got 2 applications on it. So, um, I think if you've got anything over 60 days, you're probably looking at it's priced wrong, and you're trying to get too much for it, because the homes are moving. I mean, rental market, and the interesting thing is anything under a $2,000 and under, it's moving quick, because it's and the ones that I'm sitting on right now actually have a pool with them, things like that. So I'm getting a higher dollar value for those. The stuff that I've got that's $2,000 and under, it's moving very quick.
All right. Is the boot camp required to purchase? I attended the first boot camp, and from start to rent, what is the approximate time? So we kind of answered that. Second part already, just right now. Now, so are you required to attend the boot camp to build? Yes. So we will not offer this pricing and all of this to somebody who is just saying, "Hey, Joey, like somebody calls Craig and says, "Hey, I want to build some homes." We're gonna have to go to the boot camp for this pricing, just because of everything that's involved in the education part of it. We want everybody to truly understand what it takes to be a part of this process, not just, hey, build me some homes. So yes, you do have to come. Now, once you've come, so Matt, you've come to the boot camp. You don't have to come to this one to be able to participate and participate in this pricing because you're grandfathered in. So anybody who's come to the boot camp in the past can go ahead and absolutely say, "Hey, Joey, I'm ready to build 7 years into this." But yes, you can do that.
Well, here's the thing, and Maddie, if you haven't been to one since we've been a part of it, I think one of the key things is that it's a whole different team, and I think meeting that team is a benefit to understanding what you're trying to achieve. Joey, I don't know, I can't remember if you mentioned, the rebate on it. If they build a certain number, then they get
Yeah,
rebates.
I was saving that. I was like
Okay. So, Matt, that may be one of the things you're looking at is if you know that you're going to go, I think it may be worth your while to come anyway, just to meet the team because it's a whole new team than what you would have met if you were at the first one.
permit fees. That's something that we really get into, and but it's what is
So
typically,
that's part of the build cost.
yeah. So yeah,
Yeah, so
it's
there's no so right, good question, but that's a part of the cost of the build. So when we're talking about sticks and bricks costs, things like that, that's all a part of it. You're not coming out for more permitting fees after that.
is this infill lots or new development? So
Yeah. Again, it's infill, and that's once if you've never been to Southwest Florida where we're at and where we're building, once you see it, most people just can't fathom it until they literally get on that bus and they're driving and they just realize like, oh, well, wait a minute, there's 10 lots here. Oh, there's 30 lots here. Oh, there's a block here. Oh, and yet there's houses everywhere. So that it's not like you're stuck out there by yourself with nobody around you. There's houses everywhere, but there's just so much land. It's a unique environment that I don't see anywhere else in the United States.
all right, if I wanted to get a bigger lot and build an ADU or a DADU along with the house, is that a possibility for you? And let me answer that really quick. Aaron said a lot of stuff that sticks out, but one of the things that he would always say is you got to leave your California brain in California,
That's right.
and so building in Florida is a completely different monster, you know, and so some of the things that make sense here in California and in other places do not make sense, and frankly they haven't gotten down the road legislatively with that. So Craig, can you tell us specifically what Florida building ADUs in Florida, and if that's even a thing, and can you even do that?
Yeah, on standard lots, you won't even be able to build an ADU based on density ratings and what they're going to allow. Again, we don't have the aspect of coverage and density like you've got in California, and other large metropolitan areas, because again, there's still so much land. Even if you go into some of the large metros in Florida, as far as Orlando, Tampa, those areas, there's still so much land. The people are migrating. Now it's going further and further, but there's still so much land. And the cost of land, is dramatically different than what you're paying in California. So again, as Aaron always used to say, there's two things I always used to hear him talk about but one of them was put your caliber in your brain, leave that in California, because once you run the numbers and you see the cost of what a lot really is, an ADU wouldn't make sense.
Are most of the lots in sewer or septic? It's both. Most of them that we're going to be building on are going to be septic, but it's a completely different process, and we really get into it's normal there, guys. It truly is a normal thing. I know you in California, you think about septic, you think you're out in the boonies and in some country where you can't get anything. But no, that's not the case, and we'll go over on all of that. And you'll have the option when we vet your lots to tell us if you're open to that or not. So we'll go from there. All right, next question. Is there a sample breakdown that you can provide, cost including utility connections, et cetera? That's part of the whole boot camp and the boot camp book. That'll all be available to you. So there won't be anything hidden. Once you come to the boot camp and you learn everything that you're going to learn from what it takes, you'll get every piece of the cost that's built into it. And most of those costs are already built into that 219 or whatever the price of the sticks and bricks is going to be. And are you considering other states? I guess the question to that is considering, sure, we're considering. Is it going to happen anytime soon? Probably not. And Craig, I'll let you answer that in a little more detail.
Yeah, Kevin, good question. Within this structure, right now, we're not doing anything outside of Southwest Florida currently. Again, in DBO Capital with our fund and our equity fund and where we buy, we are always looking at a lot of different things. There's a lot of states that we're looking at for our fund. But from a building perspective right now, we are focusing in Southwest Florida because we still believe with the amount of people and the amount of wealth, that's, I believe, the bigger key to hit on. We really didn't talk about that. The amount of wealth migration, we are still number one in the country in wealth migration.
Do you know what the number is?
I didn't see it as to where we are.
I
know
do.
So I know January, I think we had 100 and
Well, last year it was $20 billion that migrated.
yeah.
Okay.
Yeah,
Number two was Texas, 5 billion.
yep.
In AGI. That's what we're talking about, right? So
Right.
that is a huge part of this. And one of the things that in the old presentation we used to talk about the net wealth. And Bruce, I mean, what is it? 4 years later now, Bruce still talks about, the net migration and the wealth that's coming, that really is just mind blowing compared to what everybody else is getting,
Well, and we'll talk about this at the boot camp, but I think what people forget about is when you've got the wealth that's coming and you've got one person that's bringing in $100 million, that's not somebody that's 25 years old. That person is most likely probably in their late 50s to 70s. Bruce has gone over this a lot. That means they're requiring a lot of medical attention. It is what it is, and at that point, the more medical people you add means the more people you need to be teachers and to build roads and to run McDonald's and all of the things. And that's what we're seeing. Our economy, while it is built on wealth and tourism, it truly is a trickle-down economy because that wealth brings the necessity for so many jobs that is required to keep this market going.
Well, part of that is because it's business owners trying to get away from states that are onerous. And then the other part of that is it's still the number one place to retire.
Well, it's going to look a lot better if the property tax. I said insurance. I apologize.
Property tax is actually going to a vote, guys. Like,
yep.
Like imagine the people that are going to come and want to buy houses now because there is no property tax in Florida. It's they're going to come and rent for a couple years too. I'll leave you guys with this. Thank you, first of all, and I'll let you finish up, but thank you for joining us and staying with us for the whole hour. Really appreciate it, guys. So it is $995 per person, $500 for your partner or your spouse to come along with you. And it could be your brother too. It could be, somebody in your family. That's fine. Now, what Craig alluded to was that if you do decide to build two homes, we will give you your money back. It'll be rebated into the cost of your two homes. So you at that point you came and you got the education for free. And we've had people come learn about it and then go do it on their own. That's perfectly okay with us too. Because they came and learned what they needed to do, and maybe they have a different style. They want bigger homes, they want a different area, but they still came to the education first. I've never had anybody say, we love Norris Group events, but this one kind of didn't hit the mark. No, it's always going to be super educational, super fun, and full of value. So hopefully, shoot me an email, Joey at the Norris Group. We're going to be promoting this still, so you'll see some emails coming along, and hopefully we can see you guys and host you guys for dinner on Thursday night, the day before the boot camp starts. And so with that, I will say goodbye and thank you, and I'll leave it to Craig for the final farewell.
Yeah, guys, I'm honored that you're on here, spending your day with us, spending your afternoon with us. I guess, yeah, your lunch with us probably. But I will tell you, we are excited about this event. We've had so many people ask us about it. Again, when I was out there for the event in March, I probably had 65, 70 people asking me, were we doing a boot camp? So we're just trying to make sure and let people know what it's about, why it happens, what we discuss. There's a lot of information that goes out, a lot of strategy that's discussed. But we are excited about doing these events. I'm excited about growing our events again and doing more stuff through the Norris Group from an educational perspective and strategies on how to invest, whether it's passive, whether it's active, all of those things. So I hope you'll be there. We look forward to seeing you, and I'll say goodbye for now.
For more information on hard money loans, trust deed investing, and upcoming events with the Norris Group, check out thenorrisgroup.com. For more information on passive investing through the DBL Capital Real Estate Investment Fund, please visit dblcapital.com.
The Norris Group originates and services loans in California and Florida under the California DRE license 01219911, Florida Mortgage Lender license 1577, and NMLS license 1623669. For more information on hard money lending,